This is your LMAX exchange technical update for Friday, December 2nd, 2016. Euro-dollar. So the euro has seen a bit of a bounce out from recent lows, but it would be hard to not see the market retest that critical multi-year base at 2015 further down, which comes in at 104.63. At this point, if we do see a rally continue, it's classified as corrective and should ultimately be very well capped ahead of 109. Sterling dollar. So as you can see, cable has been locked into consolidation over the past several sessions, although the market has been breaking higher. But overall, while the market holds below a previous base at 27.96, the pressure does remain on the downside, and the rallies are classified as corrective ahead of what could be the next lower top and retest of that 31-year low down around 120. A break back above 128 would be required to take the immediate pressure off the downside. Dollar yen. So dollar yen has seen some impressive gains over the past several days, with the market trading up just shy of 115 thus far. The market is extended on the daily chart. It is overbought, and so there is risk for a bit of a short-term pullback before we do see a resumption of gains. Ultimately, though, any setback should be very well supported ahead of some previous resistance in the 107.50 area, with the 110 area more likely to be a formidable support zone. Euro Swiss. So Euro Swiss is now locked within a downtrend after breaking down below a multi-week range in the 108 to 110 area. Look for a lower top now around 108 ahead of the next downside extension towards its retest of the 2016 low at 106.24. Aussie dollar. So Aussie saw a rally this week stall out, with the market now positioned to break lower. A break back below the recent low that we saw, which came in around 73.10, would open the door for an acceleration of declines back towards 71.45. At this point, only back above 75 would take the immediate pressure off the downside. Dollar CAD. So dollar CAD has seen some intense pullbacks over the past several sessions, although ultimately here the price action is classified as corrective, with the market still confined to a broader uptrend. Look for any setbacks to now be very well supported in the 132 area, although anything should be constructive still while holding above 130, with only a break back above that psychological barrier at 130 to compromise the more constructive outlook. We should see a fresh upside extension eventually back above the recent highs that came in around 135.90 and towards next key resistance in the 140 area further up. Kiwi dollar. So Kiwi rallies are now being very well capped, and the market seems to be focused on the downside. Look for a retest and break below some medium-term support at 69.52 to open the next major downside extension towards psychological barriers at 65 further down. Any additional rally should be very well capped ahead of 73. SPX 500. So the S&P 500 posted a fresh record high this week, and the market had traded up close to 2215, or right around 2215, ahead of the latest minor retracement. At this point, though, the chart remains constructive, and we would need to see at a minimum a break and close back below 2180 on the weekly chart here, that previous weekly low, to set the stage for a potential topping and shorter term correction, or more meaningful correction. Again, if we break below 2180, it will set the stage for what could be a short term correction, and then open the door for a potential move down towards the 2100 area. Ultimately, though, we would need to see a break back below 2100 at this point to put the pressure really back on the downside. Until then, scope exists for fresh upside and a continuation of these record highs into the 2250s, 2300 area. So right now we are at a bit of an inflection point, and we'll wait and see how this correction plays out. Gold. So gold has seen some impressive declines over the past several weeks, and the market now is testing some critical longer-term internal support, which comes in roughly in the 1150 to 1170 area. Ultimately, the market should hold above 1130, with only a break back below that level to compromise the basing outlook and expose a retest of the multi-year base down closer to 1000. Again, if we see the market hold above the 1130 area and push higher, it could set the stage for a quick retest of the 2016 high at 1375. Initial resistance that's critical now comes in at 1221.